Hello everybody, I'm here with James Timpson, Fund Manager of Courtiers Multi-Asset Funds, to find out what's been happening in markets throughout September. James, hi.
Hi Leo.
Nice to be back in one room, hey?
Absolutely.
Tell us, what's been happening?
Right then, Leo. Well, September has been another mixed month for markets, and in a bit of a reversal of trends that we've been seeing this year, it was actually the UK market which did quite well. And that's because the UK market is quite heavily dominated by energy companies, in particular oil firms. So BP and Shell, between them, they make up about 14% of the FTSE 100 index. And they've done really well in the last month because the oil price has been rising. So oil futures are up about 8.5% during the month. So the UK market's actually done okay during the month, whereas the US market, which has been doing really well for most of this year, that actually had a bit of a slip in the last month. So the S&P 500 index, which tracks the biggest companies in the US, that's down over 4% for the month, with big names such as Amazon and Apple both down around 8 or 9%. So it's been another mixed month for markets. Some negative sentiment driven by the prospect of interest rates staying higher for longer, so that's driving bond prices down as well as equity prices. But yeah, we'll have to see where it goes from there.
You mentioned, was it Google and Amazon down 9%?
It was Apple and Amazon, both down around 9%.
How does that fare for the big tech stock investors that we've been seeing benefiting greatly throughout the course of the year?
I mean, for the year, they're still comfortably doing well. But it's just, in the last month, they've just slipped a bit because if interest rates do stay high for longer, then that's going to impact the valuations of these equities.
And does that go some way to highlight the risks, I suppose, investing, when you're investing on behalf of our clients as Courtiers does, what an impact that would have on the clients' portfolios and the Courtiers funds specifically, and again, I guess to highlight the price of those stocks. It's a dangerous game to be doing on behalf of others.
Yeah, so that's one of the reasons why we like to try and avoid those big expensive companies, because when rates are high, the companies with high price multiples, such as the likes of Microsoft and Google, they're the companies that are likely to be hit the hardest because higher interest rates really affects those valuations. So we try and minimise exposure to those companies.
Are there any new stocks in September that you've been looking at?
Yeah, so I think I mentioned in last month's video that we were starting to look at UK home builders.
Yes.
So they've been really struggling this year because as well as having to deal with inflation of building costs, we've seen higher mortgage rates leading to lower affordability and lower volumes, which is ultimately lower earnings. So they've really struggled this year, and because of all that negative sentiment, they've become really, really cheap. So we've sensed an opportunity there, so we've invested in 3 different UK home builders in the multi-asset funds. And if the UK economy does eventually start to pick up, then they'll be among those seeing the biggest benefits from that. Also, just actually this morning, we saw an earnings release from Tesco, which is an investment in the UK fund and the multi-asset funds. It released its earnings today, and that coincided with yesterday's news that food inflation actually went down for the first time on a monthly basis in 2 years. So that's promising, and Tesco share price did go up about 3% this morning on those positive earnings. So we're starting to see some really positive things coming out at the moment.
Keep shopping.
Yeah, absolutely. As Tesco would say, every little helps. So.
Absolutely. Thanks, James. Well, as I say, it's nice to be with you back in the room, and we'll look forward to catching up again next month. To our viewers, if you have any questions, please do let us know and we'll put those to the right people. And until next time, thank you.